Hello, I'm David Cassidy with the weekly market summary for the week ending Friday, the 26th of June. The week was another where the day-to-day index moves have been dizzying because, as we previously said, equity markets hate uncertainty, and as the coronavirus outbreak is a big uncertainty, they are currently trading on every news headline. There was plenty of positive economic data helping equity markets over the week, including the Chicago Fed National Activity Index and the Kansas City Fed Manufacturing Activity Index, which were both consistent with the previous week's strong readings from the Empire State and the Philadelphia Fed surveys. Additionally, on Friday, the 26th of June, US consumer spending surged by a record 8.2% in May, clearly indicating that as lockdown restrictions are lifted, people are comfortable to venture out to the shops and restaurants, which will clearly be positive for US employment as companies will start to rehire their laid-off workers. Additionally, the UK, which is behind the reopening curve, also provided evidence during the week of an economic recovery, as PMI data readings were particularly impressive, with significant improvements across both manufacturing and services. Unfortunately, offsetting these positive announcements was the news that the coronavirus case numbers in the USA reached an all-time high, which prompted Texas to close bars and restrict restaurant occupancy to help contain the virus. However, it is worth noting that the strict lockdowns we saw at the start of the outbreak are not being reimposed. Additionally, with reports that Donald Trump is close to announcing another round of stimulus, it may not take much for equity market sentiment to quickly turn positive again. And interestingly, as you can see from the accompanying table, China's CSI 300 was the only major global equity index to end the week higher, as its economic reopening continues to be relatively smooth and successful. In fact, the CSI 300 index is now actually up 1.04% this year, which compares to the minus 18.34% for the UK's FTSE 100 index. Consequently, as we've previously warned, until the coronavirus concerns are in the rear view mirror, we will have to live with taking 2 steps forwards and 1 step back. Please continue to view this coming week's commentaries, as although data-wise it's a very quiet week in the UK, Brexit trade negotiations restart with the EU. During the week, we also have the Eurozone CPI inflation, economic confidence and unemployment, along with the Chinese PMI and Japanese retail sales. However, most of our attention will be on the important US data, which includes consumer confidence, market and ISM manufacturing readings, minutes from the Fed's monetary policy meeting held on the 10th of June, the trade balance, US employment data, non-farm payrolls, unemployment rate, participation rate and average earnings, and the weekly jobless claims data. Thankfully, we'll get a little respite on this coming Friday, the 3rd of July, as US equity markets are closed for Independence Day.